Sales are down. Inventory is up. Welcome to our midweek market update. It is February 12th. Let me start with the easy part right now, which is the average price. So from last week to this week, we really haven't seen much of a fluctuation in average price. We're down about 0.4%. Not a huge deal. Some regions were up, some were down. But the interesting part to note over here is when we look at a 52-week high for each of the regions, overall, Durham was actually beating its 52-week high by 6.2%, which is about 58K. But Halton region was actually down by 13.2% against its 52-week high, which is a lot of money. It is $167,000. Now, I think this year I've already kind of said that I don't really expect prices to grow much. I do see that the sales are going to improve. And how is that? I already just came out and said that the sales were down and inventory was building, but let me explain this to you guys, okay? So let me start off with the inventory because that is still the elephant in the room. In my opinion, and from what I thought, is actually still climbing higher than I expected, but that is because of the sales. We'll get to that in a second. But if we look at the inventory week over week, we've seen a 6.1% increase across the GTA, which is about just under 1,100 units available, more units available. The least amount of increase we've saw was Durham region, and the most that we saw was York region and Halton. If I look at week over week inventory increase across the board, we've seen roughly 4% increase week over week in the GTA. Now, I'm going to compare it back to 2024 and let's compare it back to this year right now. So if I look at this date, February 12th, basically compared to last year, we actually have 56.6% more inventory available compared to last year, which is 6,833 units. It's quite a lot more inventory than we had last year. I want to note that overall, that's the 56.6 is average, okay? But I got to call out Halton and Peel. Halton and Peel are 75 and 76% increase in inventory based on where we were last year. Another thing I want to kind of point out again, and I did in my last video as well, is this. See, if we look at January 1st to February 12th, when we look at last year, we actually went down in inventory from the beginning of the year. So we went down 5.5%, which was about 701 units. But this year, if I look at January 1st to February 12th of this year, we're up 26.6% or 3,972 units. Just want to call out again, York region is up about 34%. So that was the one with the highest increase so far this year. Now, in terms of sales, so sales are down, okay? And they're down, if I look at it compared to last year, by about 20%, which is about 1,171 units. Durham is actually doing better than most regions. Yay, Durham. We're actually down about 15%, and York region is down about 28% in sales. Now, if I look at it week over week, last week versus this week, we're still down 10% week over week. I want to note that overall Freehold is down 4.3% and Condos is down 17.7%. So when we look at the mix, it is the Condos that are down versus the Freehold. And I want to note also that we are down in 416 condos because this is something that we are still watching very closely. We're down about 31% in sales week over week. Now, just to kind of summarize all of this, because the number one question I always get is that, how is the market and when is the best time to do a transaction? It's going to be all about timing over here, and things are changing rapidly with having the tariffs and not having the tariffs, and hearing things like, people are struggling right now, and this is the most payments missed, at least, in the last little while. I also heard that, last year we had about 50 power of sales, bank foreclosures on the market. Right now we have close to 300. So there is a constraint with people's personal finance at the same time. And like I said, the tariffs is not helping the situation. Where our government is at is not helping the situation. So overall, what I'm getting at is that the market is still lacking confidence, okay? I do still think that regardless, like a lot of people start to think about trading in real estate when the market is actually good. But we also have to remember that real estate gets traded when things are not good as well because of personal situations. One could be financial. One could be, a death in the family. One could be a divorce. Like there are many other reasons why sales still occur. It's just not because of the economy being good or bad. So all of that being said, I still do think that the weather still has a role in all of this. And I think that the sales will start to improve. I think it's going to take maybe about 30 days or so once we kind of get into middle of March. I think that's when our spring market will start to kick in. I mean, I'm saying that with a caveat. Like if we start to get 25% tariffs from the US over there and, our weather, we just end up in a polar storm, it's obviously going to change. But I think it's still probably going to take about 30 days or so for us to really start to see those sales come in. I still think based on what I'm looking at right now that we are still going to do more sales than what we did last year. But I do think that the pricing is going to be more or less flat. If anything, we'll probably see a 3 to 5% increase. If you guys have any questions about the market, and the market is very specific, it's different from Richmond Hill to Pickering to Burlington to Clarington. So if you have any specific questions, feel free to shoot me a DM and I'll be happy to share the information with you. Have a great day.